Hello and welcome to the August 29th edition of the Gold, Goats, and Guns Market Report. My name is Tom Luongo. We've got a lot to talk about, so I'm going to get right to it because there's just nothing else to say. Okay, we're moving into the very ugly period of the next phase of the Syrian civil war. I haven't talked about Syria very much recently, either on the blog or in the live streams or even here. But it's very important. We're moving into that moment where the final battle for the western portion of Syria, basically west of the Euphrates River, which is not controlled by the United States, is just about to start. And it's the next attack is by the Syrian pro-Syrian forces are going to be in Idlib. And what we're seeing now is a massive buildup of military and naval assets in the Eastern Mediterranean. This is the final show of strength by the United States before our position in Syria comes crumbling down. And this is beginning to remind me of the same kind of thing that we did with North Korea. The headlines have been thick with people like John Bolton and French President Emmanuel Macron saying, Assad, you better not gas your people with chemical weapons and all of that stuff. Meanwhile, the white helmets, which were first airlifted out of Syria, and now we're coming back in carrying apparently, tons of chemical weapons, that we're going to stage another chemical weapons attack. I really thought that we were closer to the end of this nonsense than we are now. And because of how easy things were in Daraa, taking over the area south of Damascus, from Damascus to the Golan Heights, that operation was smooth and it was easy. I talked about this yesterday on the blog, and it was because deals were made behind the scenes, mostly by, I believe, mostly between Trump and Putin. So now the question is this all just theater of the absurd, or is this renegade factions within the American government trying to force Trump's hands on the eve of the midterm elections? I'm mostly convinced that this is all theater. In the same way that I'm convinced that all of Trump's bluster with North Korea was theater. And that this is all designed to make everybody look be crazy, and for Trump to look erratic, and to force the moment to its crisis and tell everybody on board, okay, you want a war? Here, we're going to have a war. Putin's bringing ships in with Kinzhal-tipped missiles, aircraft in with Kinzhal, armed with Kinzhal Mach 10 missiles. Are we going to go to war in Syria? Is this what you want? Now remember, this comes on the heels of what I wrote about yesterday, that there was a meeting between American diplomats and high-ranking Syrian officials outlining the United States' conditions for withdrawing completely from Syria, which has not been on the table at all. And none of those conditions were Assad must go. They're not acceptable, and the Syrians told us to go pound sand, literally, because, well, there's no reason for them to. And this is part of the reason why we're doing this is to try and get them to accept a bad deal. Not that anybody should accept any deal that we sign, because we just abrogated, 2 days later because of people like fucking John Bolton, who are not trustworthy and are crazed ideologues, which brings me to this morning's headlines coming out of Iran, that there were fistfights and various ministers have been sacked as the Iranian parliament is in turmoil as the hardliners take over under pressure from Trump and all of his sanctions. Now, this is completely and utterly predictable in every way. Guys like Bolton want these things to happen, so then they have an excuse to then, to sell the idea that we have to go to war with Iran because the hardliners have taken over again. Rouhani is your reformer. And you're undermining his reforming the society because you don't actually want the society reformed. You don't actually want the Iranian people to be free of the mullahs. You want them subjugated. And you want to steal all their oil, which is one of the stipulations that we made to Syria, which is that we'll leave, but you have to leave us all your oil. Like, frickin' Trump is sitting there saying, like, oh, well, we kicked the hell out of ISIS and you need to pay us for it. Like, you destroyed my country, Assad is saying. And I'm going to pay you for the privilege of having you leave as an invader? If anything, Assad should be opening up a case in the Court of International Justice against the United States and sue us for billions of dollars in damages. I think the appropriate term here is chutzpah. So all of this is blowing up. Expect a false flag, chemical weapons attack. If one doesn't happen, then you know this is absolute theater of the absurd, and this is all just pre-positioning before Trump finally says, okay, see, look, there's no reason for us to be in Syria anymore, and we're pulling out. Because there was no chemical weapons attack. My previous attacks, missile attacks on Syria had the intended effect of scaring Assad into not gassing his people anymore. He's reformed and we're going to leave. I think that's the narrative they're going to try and spin. We'll see what happens. Meanwhile, the Dow continues to melt up along with the S&P 500, the NASDAQ. And this is, again, just more of the same thing that I've been talking about for a while now, which is that we have a rotation into hard assets while people aren't sure what to do about the debt and about where to put their money. And the Eurodollar markets have been drained. There's a lot of great work coming out of Jeff Snyder over at Alhambra Capital, or Alhambra Partners now, explaining all of this stuff. And now the Fed's really not in control of the money flows and all of that. And in some ways, I have to agree with him. So there's a lot of stuff happening here that is going to end badly for everybody, especially Europe. And it's very obvious at this point that even Angela Merkel understands what's going on and is now having to make plans, alternate plans, after Trump has effectively blown up the relationship between Russia and Germany and blown open the kind of dance that Merkel's been doing for the past few years. Working for the globalists to strengthen the EU while sucking capital and money and treasure out of the United States in order to do so. And that's what's been going on. And all those policies are ending. Now she's formally having to cozy up to Vladimir Putin and say, okay, look, we need Russian energy. And Trump is insane. Oh, that's fine. That's what's going on. That's all good. That's all to the good. And then the last thing to talk about this morning, of course, is that gold is seeming to hold on to gains, and I'll show you that in the charts in a minute. I also have detailed charts about Tesla per the request from Suzanne Johnson, who took me up on my offer to do a review of Tesla stock after Sunday's market report. So thank you, Suzanne. This is exactly the kind of thing I asked for, and you guys want more of that, please just let me know, and I'll be happy to do it. So we're going to do, we got 2 charts on Tesla today to show you what's actually happening in the stock, to give you a good idea of what the picture is. All right, so let's talk about gold. All right, so the big number here for the day, we had this great move last week, this kind of spike bottom after this massive downtrend. Now the question is this downtrend over and we're going to get a snap back up into the high 12s, or is this just a dead cat bounce and we're going to get moving lower? This probability reversal right here, 73%, is what is basically a 73% chance that if we close at around where we are today, at around 12.11 or so, that there's a 73% probability in September that we could break above this and close above that high, which would then be a 2-bar monthly reversal. It would still be terrible. The quarterly chart would still look terrible, but the monthly chart will have firmed up. And the weekly chart for gold looks better, but it still needs to break this high here at around 12.19 or 12.20. And then we move, or is it? It's not this one. It's a 73% probability of throwing up a 2-bar monthly reversal. So this is what's important. This is a weekly chart. But the important thing to understand is that in the monthly chart for gold, there's a high probability that we're going to get a move into, in September. If we get a close here this week above this level, that will then set us up for a very high probability move into September that will get the full the full 2-bar reversal in September as well. So that's what's going on in gold. This is actually not bad, but we want to see this move above 12.18. And I misspoke earlier. The level that we need to get back to in gold to push a September 2-bar reversal would be up here around 12.62. And that's the level that's important. All right. So moving on. Let's talk about Tesla. Okay. So now I think I've put this chart up previously in either a blog post or a previous post, but what's important to understand about Tesla, and I've got the monthly and the quarterly charts up for Tesla. So the quarterly charts, the monthly chart's noisy, and the quarterly chart will smooth out all the noise. But this is a really noisy pattern here, and this has been going on for what, a year now? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, almost 16 months since Tesla hit its high back here last summer. Now, note, I even have a weekly chart that I built for Tesla, and that's really, really ugly. But let's look at, but the thing to take away here is, one, this area here is very strong resistance. Notice all these high tails that we couldn't get a close. This is the highest monthly close of all time. And we have not approached that level on a monthly closing basis in over a year. And anybody who's still bullish on Tesla has to take this into effect. Has to take this into account. This is a very, very bearish scenario here. This reminds me of what we're seeing in gold. Every time we get above 350, the shorts come in and bomb it. So this is, to me, this is distribution. Okay. And this is a beautiful consolidation pattern down here, and then a breakout. But this is a noisy, ugly area, and this is not consolidation. This, I think, is distribution from buyers to sellers, or from strong hands to weak hands, from institutional money to retail money. And the telltale bars are the last three. And let's look at these last three bars. Here's the big downdraft earlier in the year on spectacularly bad earnings and production numbers coming out of the Model 3 rollout. Boom. We got to move down to 250. Then we get this huge run up. But notice how this is June, into the Q2 close, we didn't close above that high. So here was the opportunity, even if you call this a spike bottom, there was a little over 2 months here to try and close above this bar, and we got to move above that bar and couldn't close above this high and couldn't close above it. That's telling me there's serious money selling into this strength here. And then after that, you get another impulse higher, again trying to break above this bar, running into this strong band of resistance, and then the stock starts to collapse again. We come into the early August, right? And in early August, Elon Musk then turns around and says, I've got an offer to take the company private at 420. And that sends the stock right back up into this resistance zone. And the stock collapses. And this is where we are today. And yesterday's price action was terrible. Monday's price action was terrible. I will be surprised if today's price action isn't terrible. The important thing to look for Tesla to this month is a close below 286.13, which is the low from July. That would be bad, right? That would continue to confirm that this 2-bar reversal here, right? Because this is a 2-bar bullish reversal into resistance, and then this is a 2-bar bearish reversal. This has not been negated. There's been no reversal signal given here. Even a weak 3-bar reversal wasn't given. It's all been this selling into strength. And this is the shorts piling on. A close below 286 is going to send the stock back to 250. A close below 250 will send the stock back to below 200. Okay. Now let's look at the quarterly chart, and we'll see what's going on. So now here's your high price from previously, and then notice the situation. There's a 2-bar quarterly reversal here. This is a bearish 2-bar reversal. Tesla's been in a bearish mode on the quarterly chart since 2017. This is, or Q1 of 2018. This is Q2. This is Q3. This is where we are right now. Notice last month we had a huge bull run in Q2, could not close above 360. And this month we moved above 360. We even broke the previous high. So we now have an outside bar. So this is a completely normal quarterly bar. But we're still trading $50 below this. And the range is only supposed to be $76. These are all incredibly volatile bars. The quarterly range is only supposed to be $76. This is well over $150. This is well over $100. This is nearly $100. So we saw that we had a high probability this quarter of breaking the previous high and not breaking the previous low, and this is where we are. So this is a pivotal quarter. Again, if this quarter ends this way, if there's bearishness coming into the monthly close this month, it's going to set up a high probability of a bearish September as well, and that's not going to throw that's going to negate any possibility of a 2-bar quarterly reversal against 360. And therefore, this reversal signal is still dominant, meaning Tesla's in a bear market, it just doesn't know it yet. And then looking at the quarterly chart, that means that over 2019, we're looking at a move back to 180. So if you're long Tesla right now and you're not sure what to do, you should be doing what everybody else is doing, which is selling into strength. If you're sitting on high Tesla profits, you should be taking them. And you should not get back into the stock until you see a monthly close or quarterly close, a quarterly close in September above 360, or really an all-time high, a new all-time high at around 390. And I wouldn't actually get back into Tesla if I was bullish on the stock until it confirmed that it was good from a quarterly position until it got back to 400. Leave that $90 on the table. The risk to the downside to losing half your money at this point is too high. And then you're sitting on dead money, and you're also sitting on dead profits. So to me, Tesla's under distribution. But if we don't get a move below these lows, these quarterly lows from Q1 and Q2, then this is going to set up a consolidation pattern that's going to take another year or two to build out. It could easily take another 2 or 3 quarters before we see $400. If Elon Musk isn't completely, full of shit, which I think he is. But, I'm just a guy. This is the charts. This is the numbers. All right. So you asked for a detailed look at Tesla. This is what I think. And this is what I said on Twitter the other day. And just quickly looking at the chart, and nothing has changed. But the 2-bar reversal here is what's dominating this chart. And you have to respect it until it's been broken. Or we get a new closing price above the all-time high, which is around 380. Otherwise, this is just a very noisy consolidation pattern, starting with this low and that high, setting the range, and then that's what you've got. And that's where we are right now. So these 3 lows are very important, and any monthly or quarterly close below that level, or even a weekly close below any of these levels, is very bearish, because these ranges are going to be then tested to the downside. And then you'll have to pull out to and then you'll have to watch the individual, the day-to-day price action to see what you're going to do. But if you're a long-term Tesla buyer, holder, and you are sitting on profits, if you bought the company 4 or 5 years ago when it was trading below $100, hey man, you're sitting on good profit. There's no reason to get too greedy. If you're sitting on 300% profit, take it, pay the taxes, and then wait. It's never a bad idea. All right. And I know I told you all that this back here about Bitcoin. It's the same thing. This is unsustainable, and now look at where we are. So, did I do that in the portfolio? No, because I have a longer-term plan on the portfolio for crypto assets. But that's a different story. That's a different story for a different day. Now, what's happening here is we've now got a very nice double bottom formed here in Bitcoin. The other thing, and we have no reversal signal given. We're now 3 weeks after this massive signal down, and we still haven't closed above 71.50 for all intents and purposes. But the market is now testing that 71.50 level a couple of times now this week, and last week, and this week. It's tested a couple of times and it hasn't closed above it. We could see that. And a move above 71.50 will kind of set this double bottom as the new range. And I don't expect it to start a new bull market. And because it's too weak a signal after this massive 2-bar reversal here to say that the new bull market has started. That will take some more time. But it is telling you that this is beginning to settle in to this trading range between 5,800 and say 8,000. And that would be good. And I think it would be very good for the entire crypto market if that were to happen. And then a move back above 8,000 would be the signal of a new bull market in Bitcoin. I don't think we're there yet. Okay. The 7150 level is very important, and then 8,000. Okay. So now the only other thing I want to, oh wow, differences. I got to change that. Sorry. The only other thing I want to point out to you is that as I add data to this data set for Bitcoin, so every week that goes by, I'm now aggregating these statistics over a larger data set. I've picked a point in the past to say this is where my data set starts, and so every week now we're adding data to the set, and we're up to 73 weeks worth of data now, as opposed to, or 71 weeks of data as opposed to 66 weeks worth of data when I just started doing this. And so as this data set gets bigger, it'll get less noisy. But also, I want you to note that the numbers here, which are your measures of volatility, week-to-week volatility, difference between the closes and then the range, inter-week ranges, these numbers are dropping, and they're beginning to drop very rapidly. As of last week, these numbers were 660 and 640 and 60 and 70. So we're starting to see very sharp drop in volatility, and that's a good thing. Lower volatility means less emotion in the markets, and it means more technical trading, and it means smart players are coming into the market and trading professionally. And the more that professional traders dominate the market, the less it's going to move until the market gets emotional again. But that means that the market is probably under accumulation after a very, very big down move. Right. And so that's what we're going to start watching here in Bitcoin, is lower volatility and then technical resistance and support, and just kind of classic technical stuff. All right. That's what I have for today. I hope this was informative and helpful and clarifying and edifying. And if you want me to cover any other stock or any other currency or whatever, I'll be happy to do so. Just let me know in the comments below. And we'll talk soon. And we'll have monthly closes for Sunday's report, which will give us a lot more clarity as to where we are. But I don't see much changing on any of these issues that I've been talking about, the gold and Bitcoin and whatnot. I don't see those numbers changing much between now and Sunday. All right, so you guys take care. You have a great rest of your week and weekend, and we'll talk. Keep your stick on the ice.